Hello, this is Sandra McDonough with OBI. We're going to give folks another minute or so to join us. Okay, I think we can start. We're expecting a few more people, but I think we have most of the folks who are going to join us this morning. Good morning. I'm Sandra McDonough with Oregon Business and Industry, and welcome to a conversation about the impact of taxes and the increase in tax burden in Oregon. And I want to start by, first of all, letting everybody know that this is being recorded, and we will make the video available later and to our chamber partners. Thank you especially to my great partners at the Eugene, Bend, and Medford chambers for working with us on this so we can get this great information, important information out and around the state. I also want to thank Bank of America. Karen Vineyard was supposed to be with us today, but she couldn't at the last minute. So we're able to do work like what you're going to see today because of the sponsorship of our members, and Bank of America was instrumental in helping us get this important work done. So thank you. About at the beginning of 2020, as I was talking to my board and some of our partners, we thought it was time to take a deep dive look at what's happened to business tax burden in the state of Oregon. We'd heard for years that Oregon had some of the lowest business taxes in the country, and the question is business paying their fair share? But we also know that there'd been a lot of increases over the years that really changed where we are. And a lot of those conversations that we've heard in the past have been based on analysis that was done by our partners at the State Tax Research Institute with Ernst Young and EY. So we called our partners at the State Tax Research Institute and said, we'd really like to take a look at what's happened with Oregon's business tax burden over the years. And I have to say, I've been involved in all of these discussions, but even I was really surprised, I would say shocked at the results. And I think it's laid out an important conversation that we need to be having with the legislature. And then when we did this, we said, you know, Portland metro area, major metropolitan area in the state, we want to look at what's happened specifically to the business tax burden in the Portland metro area as well. And so EY took a look at the tax changes since 2019, and then prospectively what was on the ballot this week and Tuesday. I'm thrilled to say we defeated the most significant of those taxes that was on the ballot on Tuesday, and Caroline Sallee from Ernst Young will get into that, but it was a major victory for us. So a lot of you who don't live in Portland, when you see these, you're going to say, well, that's why I don't live in Portland. And, you know, we get that, those of us who do live here. But I think what you should take from this is that local business tax burden really matters as well. And so we've got to be looking not just at statewide business tax burden, but understanding what's happening at the local level. We've got, we're expecting about 100 people on the call today. So what I'm going to ask is if you have a question to put it in the Q&A or the chat function, and I will keep an eye on that, and I will make sure that all of the questions that get asked, we get relayed to the speakers. So we have with us today Doug Lindholm with Council on State Taxation and the State Tax Research Institute, Nikki Dubé, who until very recently was with Cost and is now with a law firm and will be working with us at OBI on tax policy, and Caroline Sallee from EY, who is the certified smart economist who did this work for us, and she's going to walk through the findings. It is posted on our website, OregonBusinessIndustry.com, and you can find all of the information there. But Doug, I'm going to turn it over to you for some opening statements, and then we'll turn it over to Caroline.
Great, thank you, Sandy. And Sandy, congratulations. It was a huge win. And I think that your rollout of this report contributed mightily, especially given the fact that everything else passed, but the big business one didn't pass. We have been examining the state tax, the total state business tax burden with our good friends at Ernst Young for 20 years now. I think it's our 20th years. And it started when we realized that, and you've all heard this refrain, that anytime there is a tax increase, and usually it's on the corporate income tax, that the proponents say, we just want business to pay their fair share. And the problem with that is that is a very insidious question, because it assumes that businesses are not paying their fair share. So we decided that you couldn't look at these taxes in isolation and had to take a look at what was the total burden per state of business taxes. And that was a very complex calculation, because you had to look at pass-through entities that came through individual income taxes. You had to look at excise taxes. You had to look at corporate income, franchise, payroll, the whole waterfront. And we looked at with the help of the folks at EY, we put together a business tax burden study that, and Sandy alluded to this earlier, Oregon came out relatively low for kind of a quirky reason. And that was because Oregon does not have a sales tax. Now, most people don't realize that the sales tax is imposed, 42% of the sales tax typically is imposed on business-to-business transactions, not retail transactions. And since that's mostly a hidden tax, it doesn't mean that Oregon's remaining taxes were low. In fact, Oregon's remaining taxes were not competitive because of the fact that they didn't have revenue from a sales tax. So I was very gratified that when Sandy called and said, we'd like to do something on an Oregon basis, particularly given the fact that over the last couple of years, Oregon has faced some tremendous tax proposals, both enacted and on the ballot that we just finished last Tuesday. So a great win, and I want to turn it over to our colleague at EY, Caroline Sallee, to walk us through the process. Caroline?
Thanks, Doug. Hi, everyone. I'm glad to be here with you this morning. As Sandy and Doug have mentioned, we were hired to do an analysis that looked at recently enacted state taxes and local taxes in the Portland area, both some local taxes that had passed starting in 2019 and in 2020, and those that were on the ballot this past Tuesday. So if we can have the presentation load, I'm going to walk you through our study, what we did, some of our findings, and then get into what does this all mean for Oregon's tax competitiveness. So I'm going to start off at a high level and tell you what we found. So everyone wants to know. So what did you find? So we looked at 4 state tax changes. As I mentioned, we looked at 3 enacted local tax changes in the Portland area, and then 5 local ballot initiatives, 4 of which passed. 1, the Metro payroll tax, did not. And I'll talk about that a little bit later. So what were our findings when we did this analysis? So as Doug mentioned, we looked to see, well, what were businesses in Oregon paying in terms of state business taxes in fiscal year 19? And once you layer in all of the business tax changes at the state level, what happens to that business tax burden? We estimated a $1.8 billion increase in state taxes coming from business once all taxes are fully phased in. So for one of the tax, it's not going to take effect until 2022, which is the paid family medical leave program, which is funded with a payroll tax. So we look to see, okay, once all these taxes are fully phased in, looking on an apples to apples basis for fiscal year 19, what would those taxes have generated in revenue? And we estimated about 1.8 billion increase for a 41% increase in business taxes. So pretty significant, as Doug and Sandy have mentioned. So finding number 2. So then once we had sort of that dollar amount, that increase in business taxes, we then wanted to say, well, let's put it in terms of an effective tax rate so we could compare to other states around the country. As previously mentioned, for about 20 years, we've done this work looking at, well, what is the tax burden in all 50 states? And we look at it both at the state and then local level. And as Doug mentioned, prior to these taxes, Oregon state business tax rate, effective tax rate, was on the lower side. It was at 2%. And I'll show some charts later that put this in context. But that effective tax rate was 2%. And once you add in the business taxes, the new business taxes, that effective tax rate goes up to 2.8%. So we use something here, and you'll see this throughout the presentation. We refer to the TABOR, the total effective business tax rate. So what that is taking the business taxes in the numerator and dividing it by the economic activity in the state, which is measured by gross state product. So what share of business activity is being paid in state taxes. So that is that 2% that it goes up to 2.8% when you add in the new recently enacted state tax changes. So finding 3, what does that do to Oregon's state tax competitiveness? Oregon goes from 40th highest in state taxes to 19th highest. So what that meant was, as Doug mentioned before in our cost study, Oregon was one of the 10 lowest state tax burdens, one of the states with one of the lowest state tax burdens, and now it's above average and is in the 20 states with the highest state tax burden. So tax competitiveness goes down. And then finally, on the state tax side, we obviously wanted to think about, well, what is happening with COVID-19 and what is that doing for revenue for state governments? So we used some of the forecasting of how is tax revenue going to change in the next few years, and did the analysis of incorporating these COVID-19 impacts into our analysis to make sure that our results hold, even though we're using fiscal year 19 data. And so once we modeled this through, we found that the expected revenue from businesses in fiscal year 22 is pretty similar to what we modeled in fiscal year 19. And so we felt pretty confident still releasing these results, even though we have a global pandemic happening. So that's the state tax side. On the local tax side, we looked at 3 local tax changes and 5 ballot initiatives, 4 of which passed. So once you look at the enacted and the recently passed ballot initiatives, we found that Portland area businesses will see their business taxes go up by about 23%. So that takes into account the the taxes affecting Portland businesses at the city level, at the county level, and their portion of some of the metro tax changes. As Sandy mentioned earlier, if the metro payroll tax had passed, the increase in Portland business taxes was going to be 42%. So it was very large, but even without the metro payroll tax, we estimated about a 23% increase in Portland business taxes with the ones that have passed. So finding 6. So what does that do to Oregon's local tax competitiveness? And we found that statewide, the effective tax rate due to local taxes goes from about 1.8% to 2%. That is still below the US average, but it also has lowered Oregon's local tax competitiveness. And I'll show you a little bit later on how Oregon's local tax burden is now greater than some of its neighboring states. And then finally, finding number 7, when we put this all together, what does this mean in terms of Oregon's tax competitiveness for both state and local taxes taken together? And we found that the state and local tax burden, as measured by business taxes divided by economic activity, that total TABOR goes up from 3.8%, which was below the US average, to 4.8%, which is above the US average. And I'll put that in context a little bit later on. So why don't we go to the next slide? I'm going to give you here just a high-level view of kind of our approach, so you know what we did and how we did our work. So the first step is that we had to estimate what are business taxes, a baseline of business taxes before any tax changes. And so we do that with data that's available at the state levels and the local level. Some of this data is reported to census, some of it we were using financial statements. And we compiled, okay, here's our estimate of, here's the current contribution before tax changes paid by business. And as Doug mentioned, sometimes when people think business taxes, they only think corporate income taxes, and they don't realize that businesses pay, in other states, they pay sales tax on their operating inputs, businesses pay property tax, they pay certain license and excise fees. And so there's a lot of taxes that businesses pay. And some of the tax categories are pretty straightforward. We know that businesses are legally required to pay those tax. So the incidence is on them. They're remitting, 100% of the corporate income tax, for example. But then there's other tax categories where businesses only pay a portion of it. And that's where it gets a little trickier. Some of it is still fairly straightforward. We can look at assessed values by different classes of property so that we can estimate, here's what businesses are contributing in terms of property taxes on commercial and industrial properties, on residential properties that are income generating. So that piece of it's fairly straightforward, but for others, it's a little trickier and we have to sometimes be a little creative. I will mention too, as Doug mentioned, we have in our analysis an estimate of the individual income tax that is contributed by business due to pass-through income. And so that's another way in which sometimes people don't realize that, these are other taxes that businesses are contributing. So we looked at all of that. We estimated here are the business taxes in fiscal year 19 without the tax changes. And then the second step was we had to look at, well, what is the revenue impact of each of these business tax changes? And so we researched tax revenue estimates from government sources. We used a lot of third-party estimates, some budget documents, some from the Oregon Legislative Research Office. So we looked at those estimates. We did a lot of checking. We did some of our own estimates just to double check that they were in the right ballpark. And then we said, okay, we feel confident. We put out some numbers that said, here's what we think the revenue is going to be generated from each of these tax changes on a fiscal year 19 basis. And then we constructed a step 3, sort of our new business tax burden. So what are the taxes with these tax changes? And then we calculated the percentage change of business taxes that you'll see in the rest of this presentation. After we calculated, here's what the new business tax burden looks like in Oregon, then we benchmarked it with other states. And we did that with the total effective business tax rate. So we looked at business taxes divided by gross state product. And we do that because, as Doug mentioned, there's a different mix of taxes in each state. And so we look at total business taxes in each state and we divide it by the economic activity in that state in order to allow us to then do this comparison across states. And so that's what we do both at the state level, the local level, and then putting state and local taxes together. And then finally, we did some analysis thinking about what are the COVID-19 impacts? How is revenue going to change for state and local governments? And certain revenue streams are definitely going to be lower and probably significantly lower the next few years. Other taxes we think are going to hold fairly constant, like property taxes. We're not anticipating in the next 1-2 years big changes in assessed values. Those usually lag. So for things like property tax, we have them holding constant. For things like corporate income taxes, we have those going down. So when everything kind of shook out, we saw a slight dip in revenue, but in terms of the contribution of business taxes, the levels that we were estimating in fiscal year 19 compared to what we thought maybe it would look like in fiscal year 22, they looked about the same. And so we felt confident that even with the global pandemic, we could still put these results out, and we think they hold for what it's going to look like in a couple of years. All right, so that's kind of the overview of approach. So why don't we go to the next slide? And I'll give you a little more detail about the taxes that we analyzed. So this is a table that summarizes the state tax changes. And as I mentioned, we estimated $1.8 billion in new state business taxes once all these taxes are fully phased in by 2022. And if you look at this table, you'll see four taxes, the biggest being the corporate activity tax, which became effective this year. And the estimate is that this tax is going to raise about $1.1 billion. That's on a fiscal year 19 basis. And as I mentioned, we've allocated 100% of that tax being paid by business. So you can see a business share column that indicates, what was our assumption around, well, what are businesses paying in terms of that tax, what share of it. So the first tax is the corporate activity tax. The second is the reductions in the individual income tax brackets and rates for a few of the lower brackets. We have a small reduction there in individual income tax and pass-through income due to that change. The third tax is the healthcare provider tax. So this is taxes on the premiums in the state for health premiums. And that is a tax that was extended and the rate increased. Since it was an existing tax, we do not include in our revenue estimate all the revenue from the tax at the higher 2%. We only look at the incremental change, since some of that tax revenue is in the baseline because it was taxed at that 1.5% rate. Now it's gone up to 2%. So you can see kind of our revenue estimate just relating to that increase in rate, which is $267 million. And then finally, the fourth tax is the paid family medical leave program. And that benefit is going to be funded with a 1% payroll tax. And that is split between employers and employees, with employers providing 40% of that revenue. And so you can see in the business share column, we have 40% of that revenue allocated as a tax on business. And we estimate business taxes from that tax of almost half a billion. So you can see 448 million. So that's the state tax side. So we'll go to the next slide and I'll talk about some of the local taxes that we looked at. All right, looks like the table's a little bit small, so hopefully you can read it. But at the local level, we looked at the Portland gross receipts tax, which became effective in 2019. So it's a 1% gross receipts tax on large businesses. So that's a new tax. We also looked at the Multnomah County business income tax. That was an existing tax, and the rate was increased in 2020. So we looked at the impact of that rate increase. And then finally, we looked at the Metro income tax that was passed by voters in May. And so this income tax is used to fund housing support services in the Portland region. So this is a tax in the 3-county region. And there's two components to it. There's a tax on individuals and there's a tax on businesses, a 1% tax on business profits. So that portion of the tax we allocate obviously is 100% paid by business. And then on the individual income tax side, we've only allocated about 10% of that on pass-through business income. And that's a tax that's 1% on income above $125,000 for single filers and $200,000 for joint filers. And so that goes into effect next year. So all told, once all of the recently enacted Portland regional tax changes are in effect, we estimate about 177 million in new business taxes due to those three taxes. So let's go to the next slide and I'll talk about some of the ballot initiatives. So if you live in Portland or in the area, I'm sure you're familiar with all of this, but we have 5 ballot initiatives that were on the ballot on Tuesday. So a lot of them. 4 of them passed. 3 of them are related to property taxes. So you can see in this table, the first one, the second one, and the fourth one are all property taxes. 2 of them were new taxes. So this was a new tax to fund Multnomah County libraries and some improvements there. The first row on this table, the parks property tax, was also a new tax. The second one, the property tax related to Portland Public Schools, that was continuation of an existing tax. So that revenue was already in our baseline. So we don't have, you can see all the way to the right, the new business tax burden is 0 because it's a continuation of an existing tax. Whereas for the Portland Parks property tax and the library tax, you can see we estimated, here's the new here's the revenue from those taxes on business property. And you can see that the business share on those property taxes is 39%, which is based on assessed valuation in the county, looking at, like I said, what is the assessed valuation of business property versus residential property. So then the last two taxes that were on the ballot were the Multnomah County individual income tax, and that was the revenue of which is used to fund universal preschool programs in the county, and that passed. So we've only taken the 10%. We've only taken the 10% related to the pass-through income on that tax, and you can see there's two different kind of brackets related to that tax, a 1.5% rate and then a 3% rate. And then the last tax, the Metro payroll tax, was going to be a payroll tax up to 0.75% put on employers. We allocated that 100% to business. That was, expected to raise about $300 million in revenue, and voters rejected that. So the results that I show going forward have taken that tax out. We did do analysis with that tax. So OBI would know. So the impact, the annual impact of those 4 past ballot initiatives is $52 million on a fiscal year 19 basis. So let's go to the next slide. So this chart shows what is the impact of the individual income tax changes that were approved in the Portland area. So this chart starts all the way over to the right with what is Portland's current highest marginal income, individual income tax rate. So that 10.6% that's shown currently includes the 9.9% state rate, highest state rate, plus a 0.7% local rate that's related to the Tri-Met district and is a payroll tax, which is included because San Francisco is shown and their payroll tax is included in there as well. So we wanted to do an apples to apples comparison, so we kept that in. So that's the current rate all the way to the right. And you can see that the Portland current rate was below Hawaii and Newark, New Jersey, and New York, and San Francisco, California. So it was 5th highest. And then when we started layering in the enacted changes and then what was on the proposed ballot, you can see that Portland then becomes the highest. So all the way to the left of the graph is the new highest individual income tax rate. Now that we've layered in the 3% individual income tax rate for the Multnomah County income tax that's funding the preschool, and the 1% for the housing support. So the recently enacted rates will bump that up another 4%. And then Portland then surpasses New York and San Francisco and other high rate jurisdictions. So why don't we go to the next slide? This shows in a detailed way what is happening in terms of state tax changes and what makes up that 41% increase, or that $1.8 billion increase. So in this table, you can see the different, the rows that are shaded gray are taxes that are affected. And so you can see the new tax that were added in with the CAT and the paid family medical leave program, a reduction in the individual income tax, and then an increase in the excise tax category due to the premiums tax. So as I mentioned, we are estimating that the state business taxes as a share of gross state product, that burden goes up from about 2% to 2.8%. Let's go to the next slide. So this slide shows Oregon state tax competitiveness, and it's showing how it changes in the ranking. So Oregon had the 40th lowest state effective tax rate based on fiscal year 19 results. When you layer in the tax changes, it goes to 19th highest. So you can see the green bar in the graph, Oregon's pre-tax change below the US average of 2.4%, and then going to 2.8%. And that burden surpassing that of California and Idaho. It's still lower than a few neighboring states, but it's higher than a lot of the Western states. Let's go to the next slide. So this slide summarizes what is happening in the Portland area due to the enacted tax changes and voter approved tax changes. So this shows the impact on Portland businesses due to just the local tax changes at the city, at the county, and at the metro level. And again, this is once all these taxes are fully phased in next year. Here's what that revenue change looks like. And we're estimating about a 23% increase in Portland business taxes. Let's go to the next slide. So here's what it does when we take the Portland tax changes and we add them to all of the local taxes statewide. And we do this so that we can then compare what is happening in Oregon on the local tax side to other states. So here you can see that the Oregon pre-tax effective business tax rate was 1.8%, well below the US average of 2.2%. And now that's crept up. Now we're at about a 2% effective tax rate, higher than California, Washington, and Idaho. Still lower than some others, surrounding states, but definitely the competitiveness on the local side has gone down due to the Portland changes. Let's go to the next slide. So this summarizes what has happened to the effective tax rate when you put the state and the local tax changes together. So the effective tax rate due to state and local business taxes goes from 3.8% to 4.8%. So that big increase, and this is the result of the 41% increase in state business taxes and the 6% increase in local business taxes statewide in Oregon. Let's go to the next slide. So this slide puts in context, what does that change mean and how does it compare? How does Oregon compare to its neighboring states? You can see the red bar, which is the Oregon post-tax change compared to the green bar all the way on the right, which is Oregon's pre-tax change. So we have the pre at 3.8%, well below its peers and the US average. And now the red bar, that 4.8%, that effective tax rate, Oregon's business tax burden is greater than that of the US average. It's greater than Washington. It's greater than California and Idaho, Arizona, and Utah. And again, this is once all taxes are fully phased in, and it's on a fiscal year 19 basis. All right. So as I mentioned, we did look at this and how do these results change with COVID. We did some of this modeling around, what are the different tax revenue streams going to look like in fiscal year 22 due to COVID. We relied on some revenue estimates from the Oregon Office of Economic Analysis. And so we incorporated their forecasts around the corporate activity tax, which is forecasted to be about 21% lower than original forecasts. The individual income tax, that revenue is going to go down, so the loss will be less. Insurance tax revenue is forecasted to be lower, about 11% lower. And then since the paid family medical leave program isn't starting until 2022, there's no impact there in terms of needing to revise the forecast. So when we modeled everything out, we basically found that the results, some of the levels of fiscal year 19 are going to be similar in fiscal year 22, and some of it has to do with some timing and some of the bases not growing in the next few years. And like I mentioned before, we think some of the taxes like the property tax, which is significant on the local side, we don't anticipate big changes in assessed values in the next couple of years. That would be something that would happen probably after fiscal year 22. All right, so I think we can go to the last slide, which is just a summary of what I started off with, which is, what were our conclusions? What did our analysis find? And we found that when we looked at these state and local tax changes, we found a pretty big increase in business taxes for businesses in Oregon. We estimated a 1.8 billion increase in state business taxes, which means a 41% increase once all taxes are fully phased in. And it lowers Oregon's tax competitiveness on the state side. So looking at the tax changes results in an increase in total effective business tax rate for state taxes that goes up from 2%, current levels, up to 2.8%. So loss of competitiveness, and Oregon going from being the 40th highest to the 19th highest in terms of state tax. And on the local tax side, we found that the Portland taxes, we expect Portland business taxes to go up by 23%. And this is due to both the city, the county, and the metro tax changes that have been passed. And that statewide, Oregon's local total effective business tax rate will go up from 1.8%, which is the current level, to 2%, which is still below the US average, but is now a little less competitive compared to some of the neighboring states. And then finally, when you put this all together, Oregon's total state and local effective business tax rate goes from being below the US average at 3.8% currently to above the US average at 4.8%. And this is the result of both the statewide and the local business tax changes. So with that, I will stop talking and I will turn it back over to Sandy.
Great. Thanks, Caroline. We do have a couple of questions, and I want to remind people you can put your questions in the Q&A or the chat box. We had a comment from one of our listeners. It's Phil Barnhart, who until recently was in the legislature. And he said that the provider tax is not really a tax. That's actually the increase in the tax on healthcare premiums, correct? Which is largely impacts small businesses, right?
It's on the premiums, yes.
Right, so it's a tax on the premiums that businesses theoretically buy to cover their employees, is how they would pay it, correct?
Correct.
Great. And then Representative Barnhart also asked whether we are taking into account expense reductions that governments have made that take expenses from business. I'm not really sure that I know where that's happened, but this is one-to-one with other states where we compare similar taxes across all states, right?
So in the cost report, we do a calculation where we look at what are government spending in terms of services that benefit business, and we do that calculation in the cost report. So if you're curious about what are in your state, what are businesses, quote, getting for the tax revenue, we do have that calculation. The thing that's tricky about that too is how do you think about education, which is providing a skilled workforce. So we do that calculation at different, assuming that businesses benefit from education expenditures at different levels. So I can direct you to that report, but we do that type of analysis in the cost report for every state.
Yeah, let me elaborate a little bit on that, because Caroline brings up a great point. And Representative Barnhart's question is a very good one, because his question is, that's a very good tax because businesses get a direct benefit from that tax. Well, all taxes are good if we get benefits. That's why we pay our taxes. But the problem is, are the people or the entities paying the taxes getting a proportionate benefit? And that's one of the things that we measure in our report. And just FYI, the business tax burden study is due to be out on Monday, so you'll get a sense of that. So I talked earlier about, we wanted to see to answer the question, are businesses paying their fair share? And the report says that businesses in total, on average, this is nationwide, pay about 44% of all state and local taxes. Now, that's a far cry from the 6 or 8% of the corporate income tax that most of that is addressed at, but it doesn't really get to the question, is 44% an actual fair share? And the only way you can do that is to look at what's called the benefits principle. That is, are the taxes that businesses pay equal or more to the benefits that they receive from the state? And that's the calculation that Caroline referenced. And again, that's a tricky calculation because one of the big expenditures for businesses is the education. And certainly that is a benefit to business from an indirect standpoint, but it's a huge societal benefit, and it's largely an individual benefit. And the way the report looked at this is that they dug up some studies that were done by the Chicago Fed, that very well-respected studies. I haven't seen anybody any subsequent studies that estimate under the benefits principle how much of the educational system is a direct benefit to business. And their answer was, we don't know, but we think it's somewhere between 0 and 50%. So in the study, we actually look at the range of benefits that businesses receive in exchange for their 44%. And in all cases, whether you look at 0% or 50%, the US average is much higher in taxes paid by business than the benefits received. And as to the earlier question, you had asked a question about whether the expenses that businesses don't have to pay because government is paying them, is that factored in? And the answer is yes, to the extent that that creates more income for the businesses that is subject to the tax. So to the extent that they then make more money because they're not having to pay expenses that the government is paying, then they're making more money, that's subject to tax and then would be reflected. I know that is a long explanation, but I hope that covers it.
Right, and I would just add to that, Doug, that we've had advocates who in other years have pointed to the EY study and said, we're near the bottoms in Oregon when we used to be, so we weren't paying our fair share. Well, we've moved to number 19 nationally, and we're more expensive than, in terms of tax burden, than other states in the country and in the West. And when we are looking at attracting business investment and growing our way out of this recession and adding jobs, cost matters. And from our perspective, the issue is Oregon competitive for that kind of investment that we need as we're trying to grow our way out of a recession?
No, you're absolutely right. And like it or not, states compete with each other for economic expansion, economic development, and economic activity, jobs. So the legislators have to be cognizant of that,
Right.
and be sensitive to it.
Yeah, Representative Barnhart points out that what our report calls the provider tax, we actually have a hospital provider tax in Oregon, Caroline, and this is really more of a premium tax. So we might want to change the label on that because it is a tax that is paid on healthcare premiums.
Yeah, that's a good point. We were looking at some of the state reports and how they group and that's where the nomenclature came from. But I understand that it's confusing because, to your point, the provider tax structure is very different. And I completely agree with the point that you were making. It's not the hospital provider tax, it's the tax on premiums. We used how the Oregon legislature was grouping some things. So, but I agree, it's confusing. We should probably change that.
We can change that, or at least footnote it so it's
Yeah.
So we had a question from somebody about the new income taxes, the local income taxes in the Portland metro region. And I've been getting a few of these questions. Nikki, I'm going to send this one to you on whether somebody who lives in Vancouver or maybe somebody who lives in Yamhill County but works in Multnomah County, will they be paying these new local income taxes? And I'm assuming they're going to be apportioned the way the state tax apportions, or the state apportions income taxes. Is that right?
Well, I'm going to give you my best lawyer answer, which is it depends. And I think that the answer to this question would have been much different pre-pandemic as it is now. So the tax, the new personal income tax, is imposed on residents on all of their income. And assuming it follows the state rules, it will be imposed on source income of non-residents. So if you have a non-resident in Washington, resident working in Portland, we do have source rules here. We do not have convenience of the employer rules, which is something that we see in some northeastern states. So what does that mean? That means in a world where high earners who live in Washington are no longer coming across the bridge on a daily basis, they may not pay any of this tax. So my sense is this is going to be something that employers and high earners look at very carefully and decide whether or not it's really a good idea to keep coming across that bridge and working in the county. So because I think there are different planning avenues that folks could take to alleviate that burden if they're not a resident of the county. And my sense is you're getting questions. I've been getting some questions. And so I think it's something that a lot of folks are thinking about, and goes to this competitiveness issue that has been raised a few times.
I think in the full report, which is on our website, there is a section about the impact of higher income taxes, personal income taxes. In fact, we have, as Caroline pointed out, Multnomah County is now going to have the highest marginal personal income tax rate in the country. And Caroline, you guys point out that that does impact location decisions, income tax rates, right?
We do. So, this was a question that was raised. Do these rates matter? Do individual income taxes matter? Do they matter for where people locate? Does it matter for taxable income and for pass-through business income? And we find, the research that's been done on this topic finds that there is a sensitivity for those high earners and where they locate. And so as part of the exercise, we looked at studies that have been done around this topic, and we summarize it in the report just to provide some information around, what is the impact of increasing these tax rates, and what kind of activity do you lose based on those decisions? And so the report summarizes that.
Great. So we have a question around how much of the taxes can actually be passed through to consumers. I know when we were working on the ballot measure 97, we were estimating that as much as 2/3 might ultimately get passed through, but that's really going to depend on business by business and what they can do from a competitive standpoint, isn't it? Doug?
Yeah, let me take that, and with the caveat with I'm not an economist, so I'll let Caroline clean up anything I get wrong. But typically, and we'll look at this big picture, right? Any tax that's imposed on a business has to be reflected in one of three ways: either in lower prices, or I'm sorry, higher prices if that market will bear it, or lower wages if that market is forced to go, or the place where most folks that want to raise taxes want to get to are the owners of the company. That is the folks that make the profit. The difficulty is that if those are the folks that it's the easiest to move their money, is, to take that investment and put it somewhere else. So the question of is it passed through? Is it reflected in either higher prices or lower wages? Lower wages, which is probably not something that's beneficial for anybody, is largely a question of the markets. Is the labor market tight or tighter than the market for the sale of the product, right? So it's a question of who has the responsibility to pay it or who bears the burden of it, and those are two different things.
Yeah, I agree with Doug, and the only thing I would add is, our study does not look at the ultimate economic incidence of the tax, which is what you're asking about, which is a really important question. And there's been studies that look at, how much is this passed on, who bears the burden of the tax? Is it the owners of capital? Is it the labor? Is it passed forward to consumers? So Doug outlined that very nicely. Our report doesn't get into the economic incidence. We do try to disentangle sometimes the legal incidence, and we try to think through, particularly in other states, when we look at the sales tax, we do that calculation of, no, it's not just what the business is remitting, what it's collected from consumers who are paying that tax. We're only looking at, what are businesses paying on their sales tax on their operating inputs. So we do try to disentangle it a little bit, but you raise a good point that we're just not able to do in this report.
Right.
And Sandy, I would just add anecdotally from conversations I've been having with businesses, there are many businesses that are passing 100% of the new corporate activity tax through. It is legally possible. So I think really what it comes down to often is the business relationship and who has the negotiating power on the local level of GRT. We have seen businesses pass that directly through to consumers as a line item on the bill. There's been some legal challenges there as well. We'll see how that plays out. But I think for purposes of the the gross receipts tax at the Portland level and the Oregon CAT. Those are still pretty open questions, but a significant portion of both of those, I do think, will ultimately be passed through to consumers.
Right. And I will agree with you. I've seen both. I've seen some companies pass them right through, put them as a line item on the bill. Others who say they just aren't in a position to do that because of their competitive framework, and especially if they compete in multiple states, or so it's a mixed bag. When we were working on the metro tax that we just defeated here in Portland, I spoke to a number of companies about how they were going to deal with that cost burden. And I remember one conversation with a very large company that they were looking at how they would offset other payroll related costs to absorb that one. And basically what that means is reduction in workforce or changes in benefits or other things that impact employees. So we need to understand that these taxes have more than one impact when they are out there. So we had somebody just asked, is the CAT expected to raise housing costs as contractors purchase such a high cost of materials? And I'm gonna jump in, then I'll let Nikki and I spend a lot of time on this. Our biggest concern with this kind of a tax is the pyramiding impact, where the tax gets applied at several points of the in the production. And we tried to mitigate that to some extent, but we didn't succeed 100% in the mitigation that we were looking for. But I think, yes, it's going to impact housing prices. What would you say to that, Nikki?
Yeah, I think absolutely yes. You know, this is an issue, as Sandy mentioned. There's some exclusions for agency relationships, and the Department of Revenue has been working with folks in the construction industry to try to draft some rules that would address this. However, they're still, for the most part, fairly narrow, and I think it puts contractors and, you know, the end purchaser of a home or a resident or commercial property in a real precarious situation, because it's unclear at best if the contractors are going to fit within this rule when these contracts are being drafted. And so I think there's a lot of angst about what does that mean. And I think we're going to see indemnification clauses. We're going to see contractors collecting it just in case. So this is going to be a pretty messy area as well. And I mean, hopefully the Department of Revenue or the legislature will come in with and address some of the policy considerations and what they want to do around this particular industry.
Home builders got a little bit of an extra advantage on being able to offset input costs because of this concern around housing prices. But I think, as I recall, that was temporary, and it was a little bit of an extra. But so there will be some impacts. We had a question from somebody on whether there's going to be an effort to address Oregon's archaic tax structure, and I don't see any really big tax structure discussions. There's people who want to put the property tax issue on the table. I think that's a really big discussion that's going to take some time, that I think in a COVID legislative session would be very difficult. But I will just say what this study tells me is that as we're growing out of the biggest recession in a century, cost matters, and we need to be focusing on making sure that businesses can stand back up and add costs. And so what we're going to say to the legislature is, please, no more tax increases. We are now more than the national average, and we are impacting Oregon's competitiveness at a time when we really need to be competitive. Anybody, Nikki or Doug, want to add to that?
The only thing I would say is, I think many folks were watching the Prop 15 proposal down in California to see where that went, and if that would be any indicator of would Oregon follow suit.
Split roll. right?
Yeah, and that is on track to fail at this point. So, I mean, I think that's good news for the business community, and I think a little bit of a rejection of trying to make businesses bear an even greater burden. So, I'll be curious to see how those property tax conversations go if they do get going.
It's a big and very difficult conversation in this state. So,
Mm-hmm.
well, I think that just about uses all of our hour. I want to say thank you to everybody and our partners at the chambers again for helping us get that out there. Thank you to Bank of America and Caroline. I've heard you make this presentation several times. I'm still very interested every time. And Doug and Nikki, thank you for being here as well. We will be posting this conversation on our website. So you can share this video with folks, and if you have any questions, shoot us a note and we'll be happy to work through them with you. So thank you very much. Have a great weekend.
Thank you, Sandy.